The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, are we finding some value buying? Is it the holiday malaise? What exactly are we watching in these markets, grain and livestock wise, here as we start off the week? Kind of a quiet day Monday. Soybeans, though, did pull well off session highs. Maybe some concern there. Otherwise, kind of a scattered day of some green, a little bit of red on the screen. Let's talk about it. Joining us now for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you again this week and hope you had a great weekend. And, I've been wondering, are we getting into the holiday malaise? Is there any value buying happening here? Are there other underlying concerns? I guess all in all, outside of soybeans, which we'll talk more about in a second, pretty quiet day across the trade on Monday.
Yeah, it was. You got a little bit more follow through on that corn market after a pretty good close at the end of the week last week. And, a little bit of seasonal window there as well. So we'll have to see if that market can continue to climb. But, did hear a little bit of rumors about producers selling today and against that March contract. That's why maybe it didn't quite get the bite that the other two contracts did today. Wheat side of the equation started today nicely firm. Then a Reuters article came out. Russian officials are saying despite the poor crop ratings, the crop is not as bad as everybody thinks. And I think that just kind of puts things into check, and then throw a pretty lousy export inspection week in there for wheat as well in terms of below expectations, and just brought prices off their highs. Still stayed positive though, but at least still brought prices off the highs. I think we're getting real close to that window here. I mean, talk about the holiday boredoms. I think we've been kind of in them for a while here, but at least we've had the lack of news enough. At least the corn market can drift higher, and soybeans just can't find any traction, despite another fairly disappointing close again today in that soybean market.
Well, let's dive in there a little bit more. I'm searching for some reasoning as to why soybeans fell off as hard as they did on Monday. And talk about this with me. There's some rumors out there, it sounds like, that may be having an impact. Or is it that? Is it just a lack of, good supportive fundamentals in soy? And what's going on in this bean complex right now, John?
Yeah, it's a combination of things. Obviously, the fundamental picture, there's, the confidence in the crop in Brazil continues to grow every day. We get closer and closer to that crop finishing. So, with that, there was a little bit of buzz today. I never really found anything concrete about it, but enough probably to trigger the market off those highs. We started the session 4, 5, 6 cents higher, and then we quickly rolled over. Some talk that maybe some things are happening in the Pacific Northwest, maybe China stepping out of some of those contracts that they've purchased in terms of beans, that maybe some cancellations are on the horizon. Again, those are rumors I've heard today, nothing concrete there. So we'll see if that kind of materializes over the next 24 hours, that maybe some of those beans that they've been buying so aggressively here over the last handful of weeks might be just getting put back on the pile. And if that's the case, you got a bean market that tried to rally again this morning, puts another hook reversal in off those charts to the downside. Just makes you nervous that one of these days we're going to wake up and break that support floor and see prices tumble. So, with that too, watching what's going on with bean oil. When bean oil's having a difficult day, it did earlier in the session too. That seems to bring some sellers out into the soybean market as well. That bean oil market being a bit of a driver in terms of the price of soybeans. But to me, I just still think this market's very comfortable with the supply that's coming at us, and that prices here in terms of where U.S. beans compared to those Brazilian beans for the spring, which I've heard is up to about 60 cents a bushel cheaper than the U.S. beans, just kind of weighs on this market and prevents it from going anywhere to the upside.
Well, and I wonder too, if those rumors do in fact get confirmed that we're seeing some soybean cancellations. That's one thing that we've talked about could potentially happen in this trade. And you think about, we got a big Brazilian harvest that's just a matter of weeks away. Even though U.S. beans are fairly competitive, I guess, on the world stage, still doesn't mean that China wouldn't come in here, cancel some beans, maybe watch the price go lower, things of that nature. So you always, especially even during a quiet, low volume time, I guess it's just a reminder that we have to pay attention to what's going on with some of the other world factors that can impact these markets, John.
Yeah, U.S. beans are very competitive here in the very front end because obviously there's not a lot of supplies to compete with us. Out there in this window, Brazilian beans are fairly dried up. Argentina beans also still not available. There are some prices that we could go to, but right now we're the favorite here, and that's why we've been seeing a little business. Even with that rumor of some cancellations, there was talk that sounds like Sino Grain, which is one of the Chinese buyers, has been still active in the USB market, did pick up some cargoes for March. Maybe they want to get ahead of the shipping lines that might be coming out of Brazil here in a few months. So we'll have to see. Again, it's just one of those things that just became a little buzz in the market today that probably made somebody want to go long to be a little anxious about being long and brought some sellers out. Now, it's also squaring up. We got USDA report coming tomorrow. Not expecting anything big out of that report, but hopefully we see some adjustments on the corn demand. Soybean side probably going to be more of a placeholder report, just kind of carrying those numbers over from November. So we'll have to see how that plays out. But like most USDA reports, sometimes we can just find ourselves a bit of a surprise somewhere in the numbers that could really get the market moving one way or another.
You mentioned looking at these markets too. Farmer selling's been pretty quiet, I would say, as of late. That's not, that's pretty typical for this time of year. I just wonder, do we see any of that pick up here before the end of the year, or is it more likely we could see some of that pick up right after January 1, John?
I think we see the majority of it kick in at January 1, but I've been fielding quite a few phone calls from guys saying, I got a pretty good bid out in March. I start locking it in. And my recommendation there has been you've had a nice rally. We're back to 440. Some of the basis numbers for some people in some regions are pretty decent into that March window. I've been kind of making recommendations to my guys. If you're thinking about that March window, be a little earlier than later to the cereal bowl here, in that regard. If you got a good number, take advantage of it. If you want to set the basis, but let's buy a put, make sure we protect our floor. Just keeping things very, very straightforward and simple. But that was a little bit of the chatter today. You saw it in the spreads. March only finished up a penny and a quarter or so higher today on the settle, penny and three quarters, and we still were 2.5 higher on the July. Was that there was some selling pressure going on in that March contract today as producers were locking in some of these gains here. And that could still be a limiting factor going forward, just if we see bushels move. But again, I still think I'm a little worried for the first of the year as guys start, get past the new year and realize, hey, I need some tax money for property taxes, or, got to pay some bills here in terms of my inputs for next year. And then we may have to see some more corn or soybeans moving in that time frame. Again, last year, the first two trading days of 24, we were down about 20 cents plus on corn and over 40 cents on beans in those first two sessions. So makes me a little bit cautious going into the new year, especially with the supply that is still out there.
Well, and I think about this as well. And to that point of how we saw a lot of that volatility right at the beginning of the year, I'll reiterate this. Something I talk about quite a bit, John, is that even now, low volume time, holiday season, you might not be thinking about your marketing, et cetera, but you mentioned you're getting quite a few calls. So maybe people are, it's a good time to reassess and reevaluate that risk management plan here and have a plan ahead of the holidays and ahead of the new year, right?
Yeah, the market's brought a little value in. I know it's still not great numbers and probably still tough in the balance sheet, but we could be a lot worse off, and we have been. So here we are again, 440 on March, pushing 450 May, over 450 in July. That's a solid number, at least in terms of working with things. And as I said, I'm not surprised we're seeing a little bit of movement in terms of the market here at this window, especially if the cash market's giving you a friendly basis number. So, again, think about that marketing plan, maybe some of those expectations of wait until we get back to $5 corn. Maybe you had to go back on the back burner. We can always play that through the call strategy side if somebody wants to down the road. But at least here, the market's giving you an opportunity with still a good supply coming. Even though the demand is good, there's still a lot of bushels that need to move here after the first of the year. Realistically, last year we peaked the March corn contract for March of 24 on the 6th of December, and we didn't see really the light of day again until we hit the 27th of February, and then we've got through all the March basis contracts and a lot of early season pricing. But in that time window, we lost over 60 cents a bushel on corn, going down to those lows at the end of February. Now prices were a little higher at this time frame last year, so maybe the move won't be as dramatic. But I think we got a setup in this marketplace again that very well could see the same situation going forward. Just if we got a lot of bushels to move and to meet that demand that at least has been out there.
Any geopolitical issues having an impact in the markets broadly here? I know the Syria issues, have been watching that over the weekend. Anything impacting the markets here broadly to start the week, John?
Not in the big picture. Again, the Ukraine always stays on the back burner a little bit. But again, realistically, until something happens that really limits grain flow, the market's still going to kind of just disregard the news that's out there. They played that card long enough to the point it's almost become a no news situation. Same thing in the Middle East, unless something dramatically is happening that's going to really affect transportation of grains or goods or oil or something along those lines. The market just kind of basically puts that back in the back pocket and says, yeah, something's going on in the Middle East again, but tell me what else we haven't heard, not to make light on those situations, but that's just kind of where the market gets tired of hearing information that's in front of it. So, we'll have to keep an eye on things, obviously, going forward. If things were to really escalate and kick in and all of a sudden we lose the, Suez Canal in terms of a shipping lane, or we see major issues in terms of the Black Sea and grain movement there. But right now, I think this market is truly just focused on the demand side of the equation, how much demand's out there, and keeping a close eye on that South American weather and that crop developing.
John Heinberg with Total Farm Marketing is our guest analyst here today on the show. John, let's talk over in the protein sector. I want to start with hogs. We've heard that funds have a record long position in hogs, wondering if that's something that we need to be concerned about here as we near the end of the year. I mean, if we see a mass exodus of sorts from the funds, could that, what would that mean for this hog market? Down a little bit Monday. Your thoughts overall on this hog trade right now?
To me, the hog market looks a little bit tired here. Today was our third chance to kind of get a little gas, run out a little bit, and the market just drifted back to negativeness. I'm focusing more on that February contract and how that's behaving. We put two other reversals in last week and the week prior at the higher levels. So again, here's a series of lower highs where the sellers dry up, it seems like, very, very quickly. So the technical picture looks a little soft in the hog market. You got a downtrend going in the cash index right now. The February's trading about $3 above the cash index, so that may keep things a little bit pressured there as well. So we got to kind of watch going into the end of the year. I'm very worried about that long position. Not that I think they're going to wash this thing out, because the fundamentals are still supportive, but it's a hog market and they can move things around pretty doggone quickly. Next thing you know, boom, $10 is off this market, and then it becomes a value to me, given the hog numbers and things that we're looking at out there. Really kind of watching those summer months and see if we can get June, July, and August back under the 100 level. And that might be a little bit of a buyer out there, just given some of those summer months. But right now, to me, at least on the front end, there's some pretty good value there. You got a lot of length in the market that needs to probably tighten up a little bit here. So it feels like the downside move is a stronger possibility than the upside, especially just given the fact the way the index and the cash market is kind of trending here. So we'll have to see how that plays out. But again, a little bit disappointing today to rally firmer at the open and just watch that just kind of melt away as the day went on.
How about in cattle? It felt like we kind of melted away as the day went on there to some degree too. Feeders and fats, kind of a mixed bag. Live cattle were the leaders, but well off session highs there too. So what's your thoughts on the cattle trade?
Yeah, it's a kind of a tough market to read, but I like the hog market too, though. Just feels a little bit tired here. Now, we got stronger cash, or steady to slightly stronger last week, so I think that was a little bit in the marketplace this morning. Saw a nice move in retail values on Friday also, as well as at midday today. So all of a sudden, here's this retail market that felt like it was drying up a little bit post-Christmas holiday buying, things of that nature, and now it's popped again this week. So maybe we're not through that Christmas buying window here, so we'll have to watch. Again, beef rib is a major mover in terms of the value of that carcass. It was on the decline, and also it's popped back again in value the last couple of days. So that gives a little cash market optimism. Now, today was first notice day for Friday, and today was first notice day for December. So anything long December had to be out. I think that's been a little bit of a factor in the marketplace here as well. But you look at that February contract. we rallied off the lows, but just kind of fell apart on the resistance of those moving averages and things over top. So kind of a tough day to read the marketplace. So it wouldn't shock me tomorrow if we saw some negative selling and follow through, that we could get back a few more dollars here. Maybe it's just a kind of a bottoming point in the short term. The demand is still there. The supply is still tight. Funds are getting longer, even though we backed off a little bit here most recently. So watching funds at 120,000 long contracts kind of makes me a little anxious that, hey, if they want to clean things up a little bit after the first of the year or at the end going into the first of the year, it wouldn't surprise me.
How about the dairy trade? Any big notes for us there this week, John?
We're trying to get a little footing finally in the cheese market today in the last couple of days, and put a pretty big turn in that January contract, rallying well off its lows as well, leading up some of those front end months for 25. So to me, pop some value back into that market. Right now, I'm still in the mindset of rallies meant to be sold until we see some more confirmation in solid cheese trade. So again, here we are back in the low 119s in the front end, probably front end for 25, probably a window that producers want to make sure we're thinking about some defensive strategies, just given the supply side of things and how quickly we move back to put that value in. Usually that's going to get met with some fairly quick selling.
John, as we wrap it up here today, any final thoughts, anything you want to reiterate to folks listening in?
I know the end of the year is here, and it's easy to see in a market that doesn't have a whole lot of news going on. It's pretty easy to fall asleep, but kind of just pay attention to what you're seeing. We got some signals out there, at least giving us a little value in corn. Truly think this is the window. If you got to move some of the supplies in the bin, look at that basis for the springtime. Jump on some of those sales. You can always come back and look to re-own those contracts if you need to. Options are relatively cheap right now, just given the lack of volatility in the market. But at the same time, here comes a bit of a rally. Heavy supply years, when you get that 20 cent rally, excuse me, like we've seen here off that most recent low, probably a time to reward it.
John, if folks want to reach out to you there at Total Farm Marketing for a conversation, how can they get in touch?
Sure. Feel free to reach out anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com, and that website of ours, totalfarmmarketing.com.
John Heimberg, always good to chat with you, my friend. Thanks for joining us here today on the show, and we will talk to you again next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.